See myself? Okay. Thank you guys. Yeah, no, you're good. If you stay right where you are, I won't forget. Okay. Everything
Just in
is
case I'm out of
content.
here.
Everything is content. I don't know if you guys know that. Social media is something else, isn't it? Okay, I'm sorry. Go ahead, Sarah. What'd you say?
What are some of the jobs you've had in the past?
Oh, goodness. Well, one of my firsts, definitely did newspaper route at the New York State Fair, so originally from upstate New York. Then I worked at a grocery store. That was my first official job on paper. The newspaper one was when I was 14, and back in that day, you know, the 90s, it's like, oh, you want to come work for us? Sure. And then, I don't know, I'm sure there was some paperwork along the way, but I was 14, so I don't know how much. So grocery store. And then eventually worked at a bakery, so that was kind of like a lot of fun, like learning about different baked goods and eating them, so that's always a good thing. And then eventually really started my career into more of office work, like financial, and got into sales. So I used to sell cars, so that was kind of neat. I sold Toyotas and then Dodges. So that was kind of interesting. And inside sales, flat screen TVs, until I really just wanted to focus on accounting. I got away from sales, and here I am today. Yeah.
I know you just mentioned you're originally from upstate New York, but how long have you been in Wilmington, and what brought you to the area?
Yeah, so actually this month is exactly 2 years that I moved from Syracuse, New York. So originally came to Wilmington just to, you can get more for less, okay? New York is great, it's been fun, but there's a lot of red tape. And it's just gonna be more red tape each year, and just trying to achieve some financial goals, and it's a little bit more difficult to do that. In New York, I mean, you can if you're in a different financial status, but just knowing where I'm at and get more for less, and so create some financial goals, so excited about that.
Awesome. What is your burning desire?
My burning desire is to step away more from the business, so more CEO, so then I can be there more for the kids and travel. Absolutely.
What would you say your key to success is?
Yeah, so, you know, it's interesting, we talk about, you know, living peaceable with our neighbors, right? You know, kind of showing kindness to your neighbors and to the people around you. But I really take that principle into business as well too. You know, being peaceable with your business partners, with your clients as well too. And so one of the principles I live by is in Romans 12:18. It is possible, as much as it depends on you, live peaceable with all men. So I like to live peaceable with my business clients because I don't want to get them upset.
What is something that no one knows about you?
Oh, good question. I think I've shared this one. It's tough because I'm an outdoors person, so I do like to hike.
Cool.
So when I can, you know what I mean, then I'll kind of, there used to be a really great place in New York we used to go to, so I'm still trying to find one here, but hiking is one of my favorites.
And tell us a little bit about your family.
Yeah, I think I have a pic. Oh, is it the button in the middle?
Yes.
Oh, that one. Okay. So this is my crew. On the right-hand side, there's mom. There's the 4 kids. Now that little baby is not mine. That's my grandbaby. I'm all done. So that's my grandbaby, and then that's my daughter there with the grandbaby and the dog. And then that was his first birthday, which was last month in June. So yes, he was trying to dig into his birthday cake, but he was not. I did the video, he was not feeling it. He was like touching it like, what is this? And so, you know, that was a lot of fun. And then of course I like my being by the beach, by the water, and I like to roller skate when I can. So I've gone a couple times here, but mostly with the kids. I like to roller skate without kids. If I'm gonna roller skate, I'm gonna get into it. So Cascade was a place I went to in Georgia. They have a really big roller skating rink there. So that was a lot of fun. And these are some other things I like to do. So outside ventures, foodie, traveling, playing outside, sports, you know, with kids, me days, all that good stuff.
You are good to go. Whenever you are ready, I'll give you a 5 and a 2, and you are good to start.
Okay, excellent. All right, so question of the day, what is the number one thing that most business owners struggle with in their business?
Bookkeeping.
Ooh, you're
Their
raising-
books.
Okay, close. What else?
Is it record?
Close. What else?
Their financials.
Yes, getting warmer.
Time management?
Time. You got it. So number one problem that business owners have in their life is time. But that encompasses everything else, right? Doing their books, their financials, all that stuff like that. They all have to put in time in order to figure out what it is and what's going on. So today we're gonna have a little fun. We're gonna do some show and tell. Interesting you mentioned that today, Wendy. And we're gonna do a little pop quiz. All right, let's see how much you guys know about 7 pillars. It's been about a year and a half or so, almost 2 years, and hopefully you guys know me, okay? So here's the questions. All right, so on the table, there's cards with numbers on it, okay? So don't flip it over, they have the answers, don't flip it over yet. All right, question number 1, whatever table has number 1, what services do we provide? No, you have to say the answer, whoever has, you can pick up card number 1, but don't look at it yet. Just tell me what your answer is, and then you can flip it over, see if you're right.
I know you provide bookkeeping,
Uh-huh.
you provide like organization for their records. I'm blanking on the word, but when they're like past due, like bringing their books up to term.
Okay, clean up.
Yeah, clean up, thank you.
Okay.
And I know I'm probably missing like two of them.
Big
Probably-
books.
Okay.
Thank you. Bless you.
Oh, you okay back
But
there?
something-
I'm okay.
Yeah.
Quick look.
All right, flip it over, see what you got.
CFO.
All right.
What's the answer?
Bookkeeping, payroll, CFO, and consulting.
All right, excellent. Those are the main 4 categories. All right, number 2. How many team members do we have? Who has number 2? Don't look at it yet. What is it? How many? 3. Yeah, flip it over. All right, excellent.
Oh.
3.
They looked. They looked.
Nailed it.
Uh-oh.
They thought
All
they
right,
were
That's the
question
face
number
of a
3.
shooter.
No, really, man.
I didn't tell them the answers before, okay? All right, number 3. What are the 3 niche businesses we serve?
Yeah, restaurants is one.
Yeah, restaurants, construction, and contractors.
Yeah, okay. Who has number 3?
On the money there, Zach.
Yeah, there you go.
Yeah.
Ooh.
Awesome.
Yeah.
This is good.
That's right, and
All
who's
right,
on the
number
other end
4,
of
what
the
is the number 1 problem we solve? Very good, time. All right, and then number 5, how many years have we been in business?
2 years. Did you open it before you came down?
I did.
3 years.
3 and close. Yep, pick up number 5. 3.5.
Nailed it, nailed it.
All right, excellent. So you guys do know a little bit about me.
We
huh?
pay
This is
attention.
good.
We
This
pay
is good.
attention.
Yeah, excellent. All right, so on the table, I didn't print out one for every single person, but there's 2 on each table. Look at it. Get in a little group. You guys can take a peek. We're gonna do a quick snapshot of a show and tell of what a financial statement should look like. This is for a roofing. This is a real client. That's why it's blacked out. If this is a roofing and renovations client, so this is a contractor, and this is the books that basically I help them get cleaned up every single month. This is as of May. I think the balance sheet is first, correct? No, probably. I did my own backwards. Okay, so let's take a quick peek. All right, so for the most part, who has looked at a financial statement that looks like this in some form or fashion? Okay, good, excellent. So we won't go through in detail, we're only gonna touch on the highlighted parts, okay? So as we all know, total income, right? Total income definitely for contractors or any business, you wanna organize it based on their industry. So you'll actually see, you know what I'm saying here, how their sales kind of come through based on painting, other projects, capital improvements, things like that. Income statement, sorry about that. So the income statement is gonna show them the revenue, the expenses, and net income. On the second part that's highlighted, you'll see total cost of goods sold. That's gonna be key, especially for the contractor. Hey, how much am I spending in supplies, in order to go into these jobs? Depending on what they're spending here, this contractor does landfill and subcontractor expense. Payroll is, depending on the business, gonna be at the top of the cost of goods sold. So we can see here, okay, they made 279,000, but they spent 216. They need to see that, you know what I'm saying, at the front to see, okay, all this stuff that I'm spending, this is what's turning around in revenue. And then you can see the gross profit is only 63,000, what's left over? Yes, 5 minutes, got it. So overall, the income statement is gonna give them the information over a specific period of time, over a month, quarter, or year. And then at the bottom, if you continue on to the next page, the highlighted, you can see the total expenses that they did was $85,000. So if they only had 63 to spend, but they spent 85, they're negative $21,000, you know what I'm saying, for the last 5 months in net income. Now, because they're in contracting, and you guys might know this, it's accrual accounting. So they have jobs out there that are getting paid in phases. So if we were to take the money that's outstanding and then add it to it, they're probably in the green or in the black at this point. But because of whatever they're actually collecting right now, it's showing them in the red because of outstanding revenue that hasn't been collected yet. Okay, excellent. So that's our income statement. So that's gonna show how much the business is doing and what is left over. The balance sheet is more of like the report card, okay? This is what bankers, right, Ms. Sarah, lenders kind of take a look at a little bit more than the profit loss. They want to see, hey, what are your assets, how much in your checking account, what kind of equipment do you have? And so that's why it's really important on the balance sheet to give that information and to collect all that. And that's what we do. I am big on, give me all your equipment. I need everything, 2,500 and over. About 8 times out of 10, most business owners don't have it on there. Oh, my bookkeeper never asked that, my accountant, or the accountants will take it at the end of the year, and that's fine, but you really should be seeing it, you know, throughout the year, and it makes it easier for the CPA as well too, and there's depreciation right off. So at the top, you have the total bank accounts, and then on the next page, it's highlighted yellow, is your total assets, and that'll include all the equipment. So the balance sheet is going to do that. It's gonna show all the checking, savings, how much customers that owe you money, right, as well too, fixed assets, and then how much money the business owes to others. So on the next page, you have your liabilities, your credit cards, your loans, you know, how much are you spending as a business? So the lender takes a look at that and says, wait a minute, you might have, we'll say here, okay, total assets of 444,000, and you owe 172,000. That'll be the difference of the equity. They can say, okay, that's not too bad. Maybe we can do a loan on that, they put a lien on the equipment, and then they can kind of decide the healthiness of the business itself. So this is the balance sheet, should be really nice and clean, and should give them this so then they can determine how much you can borrow. And then at the end, the total equity, this could be shareholder contributions, sometimes investments in business. You can do investments in a business name, like if you have a Fidelity account, things like that would go over in total equity. All right, the next one is your income, cash flow statement. What is the cash flow statement? That's the last page. Think of the cash flow statement as a statement that combines the income statement and the balance sheet together. It says how much money can the business actually be touching. So we saw on the income statement that we saw the net income, that just shows how much left over, but that doesn't mean that's how much money you have in your account, right? Or how much you can really touch. So the cash flow statement is gonna give you that kind of financial, say, okay, we're negative, but we just saw $21,000 in net income, but really, you know what I'm saying, for the cash flow statement, if we see at the bottom, it says $18,746. Oh, okay. So we take all the operating activities, everything in the income statement, everything from the balance sheet, and then when you subtract the two, it shows, okay, you should have about $18,000 in liquid or cash that we can touch, we can use. Maybe we need to buy something, maybe we need to, I don't know, hire people or something like that. So the cash flow statement will give them the snapshot of how much money they can actually touch. All right, you guys following along? Okay, all right, good deal. Any questions on that so far? No? Okay. All right, so this is just a snapshot. I didn't know if anybody knew what's gonna kind of be here. I know Brett, you know what I'm saying, you're a little bit new, but we kind of answered the questions from the other ones. This is a little bit of what we do, which we mentioned earlier, the full service, bookkeeping, payroll, CFO, and then this is really what we offer the client. One is the time, redirecting their time 5 to 10 hours a week, That's if you do $200 an hour, that's $1,000 a week that they're losing in revenue because they're doing their own bookkeeping. And so I forgot to finish it. On average, we can increase the revenue about $48,000 a year by just taking bookkeeping off their plate. And this is the team. So now they've been with me a little longer. So Jeremiah's coming up to 2 years. Oh, actually September, so he's a little bit more than a year and a half. Priscilla just came up to a year this month in July, and then Bria down at the bottom has been with me for 3 years. So as a team, together, everyone achieves more. All right, that's it, guys. There's a snapshot. There's my QR code.
I have a question, and this might be more for the CPA, but I have several business owners that are clients, and it really is like my biggest pet peeve. So they have a big tax bill at the end of the year, and they're like, okay, well, what can I do to decrease the tax bill? So then they go out and buy a $100,000 work truck, and now their payments are $1,500 a month. And it's like, yeah, you saved on taxes, but like long term, this isn't really like what's best for you. So how do you kind of like show or like balance that conversation with clients?
Good question. So it's a catch-22. It kind of depends on where the CPA can take that money, because they can take that depreciation and put it all into 1 year,
Right.
and give them, a really nice write-off, or over like a 5-year or 7-year period. It's really going to determine, can they afford the payment? So it comes a little bit more on my end, on the bookkeeping side, looking at that realistically. But then on the CPA side, okay, if we do it, is it, yes, it's gonna make sense on the tax side, but does it make sense financially month by month? So we really have to work together, and really see, or I can bring some insight to the CPA and say, listen, I know it could really help them. What's gonna be more of an advantage for them? Is it gonna be more advantage on the tax side, but they might take a hit during the year? But I can review that and kind of just see what's gonna be the best option.
Cool, that's good.
Yeah.
Because
No,
usually
that's a good
the first like 5 to 7 years, it's not an issue because they need stuff anyways if they're growing.
Yeah.
But then they get to the point where they're just buying stuff to buy stuff.
Yeah, and sometimes that's not always, you can do tax prep. I mean, of course, like the home office deduction, mileage, if you're able to do that. And then yes, buying stuff, or even buying stuff throughout the year instead of waiting to the end of the year as well too.
Right.
But yeah, there's always a couple options, but I would definitely try to bring some insight.
Cool. Thank
Yeah, excellent.
Maggie, on this report, just a curiosity on the
Yeah.
balance sheet,
Yeah,
you have bank accounts and it has negative $1,500, and then you have cash in bank 20,000.
yeah.
So, would I be panicking that I have negative $1,500 in my bank account?
No, so
Okay.
cash in bank just means like cash on hand. So all that really means, because this kind of came in from a previous year, we just kind of left it. All that means is that there was more items bought in cash than there was cash put into this category.
Got it.
So it's not necessarily the cash really in the bank. Ideally, yes, if this was a client that was depositing real cash, like restaurants, they're always depositing cash because they're going in there, that would be more realistic. This client did like 1 or 2 transactions in cash, but she bought more stuff with cash, so technically I do have to show it through that.
Got it.
It's just an accounting thing. So no, you don't need to be alarmed, Toby, you're all set.
Thank you.
You got money in the bank. Yes.
Appreciate it.
So I get this question a lot, and it's more
Yeah.
than a morality question, but I know you have clients that are cash businesses that are
Yeah.
like, how do I get this cash in the bank without being flagged?
Yes, okay, this is my favorite story.
Mhm.
So I had some very interesting clients when I signed them on, and we'll get to the cash part. I said, okay, tell me how you are depositing the cash. They said, oh, well, I'm not. I just take it in, I just pay my bills and we buy groceries. I just pay my mortgage. I didn't know I had to deposit. I said, oh, okay, well, let me retrain you on that. Or a lot of times, they're not depositing at all, or they'll deposit some, so it doesn't look too bad, and then kind of pocket the rest. And pocket the rest means I can put it into the business, I'm not putting back to the business. So what I do to tackle that is I educate. Really, financials is educating the client, and it's my responsibility, fiduciary responsibility, to give them the best accounting practice. At the end of the day, I could say, well, no, you can't just put it in your pocket and pay your mortgage. We do have to put it in the account and then transfer it out. So usually it's called the owner's draw. So they deposit $1,000 to follow the paper trail, and then you can take that and just do an automatic withdrawal right into your personal, and then now you can pay your mortgage, you can buy your groceries, whatever you want. And so it's just educating them, you know, on doing that, but sometimes I do, and they still do it. And so I just document it. I'll remind them, I said, hey, the cash is off. And, you know, so they'll give me receipts if they have receipts of stuff they bought, but a lot of times if there's no receipts, that's an owner's draw. So I don't know what you did with it, so I would have to assume you took it for personal funds. Yeah, oh, that's a fun one, trust me. Anything else?
Cause, well, when you're dealing with
Yeah.
clients like that, like David and I were just, they're gonna have some tax issues at some point, right? Like,
Yeah.
I mean, does that ever get red flagged, like?
So if they ever get audited, I'll just say from experience, because
Yeah.
I've got a client that does it, and he's been caught, and he still does it, and I just have sound disclosures that I'm not,
Yeah.
you know, recommending. So what happens is two things. One is they're saving taxes today because they're not reporting that as income, so they're not having to pay it. When they get audited, there's gonna be a mismatch between the funds that are in the bank or in the business and the funds that they were paid. Because there's two sides to it. They're receiving it, but someone else is deducting it if they're paying it.
Right.
So those have to match up. The other issue is where, and then they're gonna have penalties for underpayment and things like that. The other issue is like when we go with a business owner to exit their business, now their business doesn't look as valuable because they're not reporting all the income that it was receiving. So
Yeah.
they end up biting themselves, you know, in the back of that.
Yeah, and that's what I educate them. You're not showing the true value of your income. So you might look a little bit low on paper, but reality, we didn't, you know, or you didn't record $20,000 of cash. Hey, that looks good on paper. Let me help you between me and the CPA, get those reductions out so then you don't have to pay taxes on them, but always show your cash income. It's all, I mean, at the end of the day too, it keeps you away from any type of audits. And it's just, you know, it's the right thing to do, and it makes you look good, it doesn't make you look bad, and it's just educating them and making them realize that. Yeah, absolutely.
Thanks.
And I would say too, on the banking end, like, we've closed several accounts, like, for structuring, like, the banks will catch wind of it, and they will close your accounts right down. So, and then you won't be able to have accounts with the institution any longer, so, and, so we've had people come over from others that we didn't realize, and we had to close their accounts down because they were doing that, and then we've had, and we'll try to talk to the clients, same as you do, with like, this is the rule, like, these are why you have to do this, and they still don't, and so, like you said, when you educate them, if you don't, there can be repercussions on the banking side.
Yeah, even some
That's a downer.
real estate investors.
Reality
I
sucks.
have one particularly that I, you know, signed on, and I'm learning the account a little bit more. There's some commingling going on, especially with the real estate guys that, you know, they buy properties, they fix and flip, but they have one property that's investment property, and it's putting money into the one that's actually the rental. But I took money out of this to do the rehab, and now it's over here, and it's like, okay. Well, as long as we can follow the trail, and that's the key thing. But yeah, even on the bank side, I'm sure you guys see that with the real estate guys, yeah. That's
So
what I'm-
I'm seeing that a lot
Yeah, sure thing.
in the automotive repair industry.
Mhm.
A lot of times they'll, well, if you pay cash, and that doesn't mean check, it means cash, you get a nice 10%, 15% discount. And I'm just trying to figure out how they, because I've got a receipt, and if it's for my work vehicle, I'm writing it off.
Absolutely.
Yeah.
And so I'm just
Yeah.
curious how they can survive by doing that.
Yeah.
I think they're not reporting the income, and as long as it doesn't get audited, I mean,
They're under the radar.
Well, and the key thing is your point of sale system. So if you're recording it and your point of sale system is cash, right? I mean, that's already the paper trail. And so now, for example, I have a restaurant lady, I'm still, been with me 3 years, I got a reminder, she's doing better, but the point of sale system is telling me X amount that you brought in cash, right? The restaurant brings in the cash, so she's not putting it all, you know, in the bank. And so, right, well, there's tips too, so she does the cash tips, but those tips aren't going in the bank, so that's fine, I know how to kind of categorize for that, but then she's like, oh yeah, I need to go to the store for that, so I need the receipts. She don't have the receipts, so that means the difference has to go to owner's draw. But the point of sale now, if the mechanic is not putting it into their point of sale system, that's when they're really cheating the system.
And
Because
that's what I was
now you don't even
wondering.
know you received it. It might say on your receipt cash, but if he's not ringing it up at all, that's fine, it says it on your receipt, he's pocketing it, you know, and at the end of the day, it's not my point of sale system, so it was never really a sale. Or, I know, it gets really tricky.
Well,
I mean,
obviously I'm getting a receipt, you know, so
Yeah.
it's a full, nice printout, and here you go. I
yeah,
just
if
wonder
he's
how
doing
they-
handwritten, then that's questionable, but if it's in the system, more likely they're running it through their point of sale system, but that's where the audit comes in. If you're putting through your point of sale system and you're not depositing, that's already, the paper trail is gonna be
Yeah.
questionable. So, yeah, good question, guys, all right.
Thank you.
Yeah, how old is my grandbaby?
One.
Oh, I saw his hand.
His hand came up.
Okay, how old?
I'm going 6 months.
Yeah?
Am I wrong?
No, that's
Oh,
wrong.
oh.
Who's next? Tammy? Yes. All right, thank you guys.
6 months. Okay.